how we think about the evolution of banking. So we start with Bank 1.0. This is very traditional banking, branch-based banking. This is what started with the Medici, owned banks in the 14th century. Then going through to development of other, central banking systems, starting in Europe and so forth throughout this time. And the oldest bank in the world today is still around from the 1400s, 1472, Monte dei Paschi, based out of Siena in Italy. But it wasn't until the 1970s and 1980s where we started to realize that the branch had serious limitations. We had batch processing limitations in terms of transactions. We had geographical limitations. Back in the 70s, if you didn't have enough money for your weekend and your friend invited you to go out or something, you were stuck because there was no such thing as ATM machines, there was no such thing as credit cards. You had to have visited the bank branch by 3 o'clock Friday afternoon, otherwise you were in trouble. So banks had to extend the way they delivered bank functionality. So we started with ATMs and call centers, and then in the mid-90s we get internet banking. But all of this is really reinforcing the existing branch model, the branch products and services, and just trying to extend this through these multi-channel efforts. So when you hear someone talk about multi-channel or omni-channel banking, what we're actually saying is how we use technology to extend branch-based banking. It's not disruption of branch-based banking. That didn't happen until the release of the first smartphone. Because for the first time now, we could start to design banking optimized for a real-time experience in the phone. You could get for the first time, because of mobile banking apps, you could find out what your bank balance is in real time. Before you have a bank branch and find it on the telephone, or maybe drive down to an ATM.